Idaho Matters is brought to you in part by St. Luke's Pharmacy, now offering free home delivery. For daily medications or one time prescriptions, home delivery is easy to set up. It's convenient and safe. St. Luke's Pharmacy, now delivering to your doorstep. Information on how to get started at stlukesonline.org.
Love Boise State Public Radio podcasts? They are free to enjoy, but not free to produce. If you can give, your support helps keep shows like Idaho Matters and Scandalize available to everyone. Donate now at boisestatepublicradio.org.
From the studios of Boise State Public Radio News, I'm Gemma Gaudette. This is Idaho Matters. The stock market has been on a remarkable run lately, even as many Americans are still feeling the sting of higher prices for things like groceries, housing, and gas. Corporate earnings have been coming in stronger than expected. Tech and AI companies continue to drive huge market gains. And semiconductor stocks, including Micron, saw another big surge this week. Now, at the same time, interest rates remain elevated. Gas prices are climbing again across the country. And there is still a lot of uncertainty about where the economy is going next. So, how do we make sense of these seemingly competing stories? I mean, why does the economy look strong in some places while so many people still feel financial pressure in their daily lives? So to help us put some perspective on all of this, Jason Norris with Ferguson Wellman Capital Management is joining us now to talk more. Jason, it's nice to have you back on the show.
It's great to be back.
So Jason, when you look at the economy right now, do you think there is a misunderstanding that people are seeing? And if so, what is that bigger misunderstanding that maybe people need to have a better understanding of?
So I don't know if there's a misunderstanding, but there is a tale of, I don't know if it's two economies, but multiple economies. Because you look at higher oil prices, higher gas prices, it's really starting to pinch a lot of consumers. And we're starting to see that in the data. Reduction in spending in certain areas of travel, as well as furniture and other areas. But business spending, specifically in AI and data center spending, continues to accelerate. And so that's what's really been helping, especially the stock market, because there's a lot of technology exposure in the stock market.
So, Jason, we do keep hearing concerns about inflation. And I mean, the higher prices, I mean, we do see them in so many places. But as you mentioned, I mean, earning reports are still coming in strong. So what does that tell you really about the overall health of businesses, but also consumers?
It's still a little early on the inflation side. We're starting to see it in the data. This week, we had two, I call it negative reports of inflation growth. And we're really starting to see it, jet fuel prices. One area was furniture prices, because that has an impact of transportation costs as well as tariffs. And eventually, over the summer, we're going to start seeing more and more of an impact starting to squeeze consumers. And there's going to be a portion of the population that's going to pull back spending because things are just getting too expensive and for their monthly budget.
So, Jason, you wrote a blog post recently, and one thing you wrote about was keeping gas prices in perspective from a historical standpoint. In your opinion, why is it important to look at inflation-adjusted prices instead of just the number that we're all seeing at the gas station right now?
And maybe this is kind of the little nerd financial analyst, but gas prices are $5 a gallon is a real number and a high number. But if you look back 15 years, it's a lot different because people's wages have grown, inflation is up, and so $3 15 years ago is maybe like $5 today. So putting in perspective of what percent of income is being used on gas and energy is more important. And when you look at today, call it $4.50, $5 gas, it's comparable to where we were in the early 20 teens, roughly about when it was about $3.50. And so the sticker shock is real, but the impact on budgets overall for consumers, we've been here before multiple times over the last couple of decades.
So can we talk about energy prices? Because when you look at this, at what point do these prices really start to change consumer behavior, like in a meaningful way?
We're probably starting to get there. but it's more time. And you can have a $5 gas price for 2 weeks and maybe people will spend it. And then if it comes down, but if we see elevated prices throughout the summer, then I think we will start seeing impact on travel, impact on
Mhm.
spending. Anecdotally, when you talk to people, they're already saying we're traveling less or we think we're going to travel less because it costs too much. And the longer prices stay elevated, the risk is it does slow consumer spending. Unfortunately, the majority of the impact is felt by those on the lower end of the income spectrum. So the impact on the overall economy initially won't be as great as feared because the primary driver of consumer spending is those above 50% in the income distribution.
Okay, so you also wrote about the fact that Americans actually spend a relatively small percentage of their income on energy if you compare it to things like healthcare and housing. So, has that changed at all how economists are thinking about, these oil shocks and stocks, compared to a few decades ago?
Economists do look at it differently just because the impact on budgets and consumer spending is less, especially on the energy side. But that doesn't mean it doesn't hurt, especially with healthcare costs, housing costs being up more, dramatically more over the last 10 years. So we try to balance it, looking at it holistically. But it is a concern, but the downside about gas prices being up, it's the one price you see every day when you're driving around, so you can feel it and you see it, rather than if prices go up in other aspects of your life, you really don't see it because you're not purchasing it once a week.
Well, and I think that is such a good point that you make, Jason. I mean, I'm thinking about just the last couple of times I filled up, where I filled up my tank and my son's tank, and it was $75, and then I filled up again 2 weeks later, and it was $100.71. And I mean, the fact that I remember it down to the cent, I think says something about, about how we're all thinking about gas prices, no matter what income level we seem to be in. Is that a fair assessment?
Yes,
So
that
with
is
that
important, and
said, I wanted,
we're seeing it in the
oh, go
consumer
ahead.
sentiment. Sorry, we're starting to see that in the consumer sentiment numbers, especially when you look at the recent surveys from University of Michigan and other consumer sentiment. Those are at historic lows. But what we're seeing in spending, it's still relatively robust. The benefits of higher wages, which we've seen over the last several years, has helped cushion that blow of higher gas prices. But eventually, there's only so much the consumer can, let's call it, withstand until behavior changes. And back to your point, when you fill up your car, it's $25 more a couple weeks later. Eventually, do families decide we're not going to take this vacation or we're not going to go out this weekend. We'll just kind of take a staycation. And that's what we're looking for. We haven't seen that yet. But over the course of the summer, that's going to be very important, seeing is there a change in consumer behavior that will have a negative impact on the economy.
So I want to talk a little bit more now about market gains, because it seems that it's really being driven by AI and semiconductor companies. So, in your opinion, in your expertise, how much of this feels like a sustainable trend versus this investor excitement, maybe about something new and edgy?
It's a little bit of both. It is exciting, and the technology development and change over the last couple of years has been, historic. Even looking back to, the internet, it was kind of a slow transition in the late 90s, but the stocks acted, meaningfully. But there's going to be next year, there's going to be over $1 trillion spent in AI capital spending. And those are from companies who generate a lot of cash flow, are profitable, the likes of Microsoft, Google, Facebook. And so the demand is there. And you look at Micron, the stock's up multiple hundreds of percent over the last 6 months. But
Hmm.
based on its earnings, you could argue it's justified because the demand for its product is is grown meaningfully. And historically, at Micron, they produce chips that are more commodity based and prices usually go down, but they're able to raise prices and companies have to buy them. And so it's a sweet spot for a lot of semiconductors over the next couple of years.
So is that the kind of space we're seeing right now, or investors are seeing when it comes to the semiconductor space, in particular Micron? Because as you mentioned, I mean, it's a real standout right now.
That's that part of the market is seeing a lot of growth. If you look over the last couple of years, first was the names like Nvidia was the first huge beneficiary of this spend, and then it was Google, Facebook, Microsoft, and then now the realization of how much capacity these data centers need of compute power. They need a lot of memory. And when you look out globally, there are three companies globally that produce the same memory, and two of them are in South Korea. So it's Micron, Samsung, and SK Hynix. So I don't want to call it a virtual monopoly or an oligopoly, but when there's only three providers, you can get a lot of pricing power when things are tight. So I'm not saying buy the stock today, but I'm saying there's still a lot of fundamental momentum on their revenue growth as a tailwind over the next couple of years.
So it seems that one thing that continues to, I think, be surprising is that we are seeing stocks go up, right? And at the same time, um, the economy still feels really uncomfortable for a lot of households. So, Jason, how do you explain that disconnect?
I would say it's kind of a simple answer, and I apologize because the S&P 500 or the broad market is roughly about 40% technology stocks. And when you look at the US economy, the primary economic factors or attributes, it's two-thirds consumer spending. So
Mm.
the market is driven by technology where consumption and inflation are more important to the economy. So there is a disconnect from between the stock market and the economy because the largest exposure, grocery stores and gas stations where people spend their money, those are very small pieces of the market where the likes of Nvidia and now Micron and Microsoft, spend very little of their paycheck on that. So that's why the stock market can do very well, whereas consumers can feel pinched because what they're seeing in their everyday life um, is inflation and it's higher cost, but it doesn't have as much of an impact on the stock market as it does for the economy as a whole.
So before I let you go, you've mentioned really watching what happens this summer. So I'm curious, what are the big indicators you'll be watching most closely as we go into the summer months?
I think what we'll be looking at is a lot of companies that maybe more big ticket companies that are seeing a major decline in sales or demand. And we saw one earlier this week. Whirlpool was one of them. They saw a major drop off in demand, primarily because of transportation costs, higher inflation, as well as the tariffs. So if we start seeing other companies, more lower end, retailers, TJ Maxx, Chipotle, where people go out and they're just reining in spending on those marginal items that are, I'm going to call it treats, then that
Mhm.
will really show that this higher prices of gas are starting to impact decision making, and that can be a headwind for the economy.
Well, I want to thank you so much for taking time for us, Jason. We've been speaking with Jason Norris with Ferguson Wellman Capital Management Group. Thanks so much for listening to this episode of Idaho Matters. And for quick news of the day, start your mornings with our podcast. It's called The Connector, Idaho Daily News. Know someone who might enjoy our podcast? Be sure to share it with them today.
Every day on Up First, NPR's Golden Globe nominated morning news podcast, we bring you three essential stories. At the heart of each story are questions. What really happened? What really mattered? What happens next? At NPR, we stand for your right to be curious and to follow the facts. Follow Up First wherever you get your podcasts and start your day knowing what matters and why.